remained strong in February with equity inflows rising to nearly 26,000 crore rupees. SIP inflows, however, dropped due to lower number of days in February. Mitali is here with more details.
Right, so SIP inflows, they saw a slight dip in the month of February, coming in at around 29,845 crores, slightly lower than 31,002 crore rupees reported in the month of January, a month-on-month decline of about 3.73%. Now, the drop, it is told to be largely technical, as February had fewer number of days, leading to less number of SIPs. Meanwhile, the equity mutual funds, they continue to see heavy investor interest. The net equity inflows, they stood at around 26,000 crore rupees, up from the 24,028 crore rupees of the figure that was reported in the month of January, indicating sustained participation from the retail investors. On the overall front, if you see the total mutual fund inflows, they came in at around 94,530 crore rupees, compared with 1.56 lakh crore rupees, which was reported in the month of January. Now, despite this moderation that we see here, the industry's total AUM, it has actually surged, reaching 82.03 lakh crore rupees, up from 81.01 lakh crore rupees in the month of January. Looking at the category trends, if you see the gold ETFs, they witnessed an inflow of just around 5,255 crore rupees, which is actually a sharp fall from the month January's data, that is 24,040 crore rupees, which was suggesting some cooling off after the earlier strong interest in the gold ETFs. Now, looking at the large cap funds, they attracted nearly 2,112 crore rupees of funds, which was slightly higher than the 2,000 crore rupees reported in the month of January. The mid cap funds, they saw inflows of around 4,003 crore rupees, while the small cap funds recorded 3,881 crore rupees of funds. Both the segments continued to draw the strong investor traction. On the other hand, talking about the ELS funds, they saw an outflow of around 950 crore rupees for the month of February, which is quite higher if you compare with the numbers of January, which was an outflow of around 593 crore rupees. The liquid funds, they witnessed a strong surge in the inflows of at around 59,077 crore rupees, reflecting increased short-term treasury allocations. The dividend yield funds, however, saw muted interest with inflows of just 21 crore rupees, down from 48 crore rupees, which we had seen in the month of January. So overall, the February data, we saw that some moderation has been seen due to the seasonal factors, but the underlying trend of steady retail participation in equities, they still remain intact.
Thanks, Mitali, for those details. Now let's listen into DPC.